In this video, we're going to animate for our clients and prospects the idea of income tax rates varying in the future. More importantly, we're going to show how life insurance might be able to smooth things out for you if it rides alongside one of your investments that's vulnerable to tax hikes in the future, predominantly in the retirement phase of life. So before we get started, remember, as a financial advisor, the more you learn, the greater the gap between you and your client and prospects. So that's why we use Cifico to bring us back to elementary presentations and to ground us. It's an experience that your clients want to pass on to others as well as enjoy themselves. So here we are on the animation screen. How did I get to this screen? I simply took a life insurance illustration file, placed that on the client manager, and I pressed play. All the data has been transposed. This is a video, and like any video, we have a little player bar down below. So you can kind of zoom out here. This client is much younger than 70. This horizontal line is their lifespan or their age. I'm just fast forwarding to retirement section where some distributions will take place. So this horizontal line is their lifespan, goes all the way out to age 100. We'll zoom back in. Here's the life insurance policy. Gets a name, life policy. This is the net death benefit, which is the circumference of the circle. This is the cash value, the net cash value, which is the blue growing inside that circle, looking to fill it up. Before we get to tax rates changing, it's probably a good idea to share how we create a tax-free distribution from a life insurance policy, how we handle that. So we're going to slow this down to start and then press play. So the death benefit and the cash value for that year will go down. As a consequence, we are taking out $25,000. Rather, taking out $25,000 creates this decrease in death benefit and cash value. And right now what we're doing is we're returning all the premiums that were paid to you, and those are income tax free. So we don't have to worry about, income tax being up or down or the same, because it doesn't apply here. We're just returning the premiums to you. Now I'm going to skip a few years here just for a moment. I'll go out to age 76. It's been giving 77. It's been giving all these distributions, and I have this slow. You could play it at any speed that you want. Now in this year, you'll notice that we did not take $25,000 out. We took $9,200 out in that distribution, and it's tax-free. This is the last of the premiums being paid back to you that you put into the policy. So now that hits, and now what comes out to make the $25,000 goal that we've been maintaining every year is gain, and the way that we make that tax-free is to borrow it, and that is why we have now, instead of just net death benefit, net cash value, we also have now a loan balance. So we have a little red in here representing the amount borrowed on the policy, and we can increase this to 1 speed. But now this is all just borrowing, and this can get the client used to not worrying about hearing things like loans and borrows and interest payments, because we've taken from this policy at a pretty mature time in our lives, so we can do a lot of things. So even if there are interest payments being made, all that stuff is factored in. These are all net results. So you can kind of share how we transition from returning the premiums tax-free to borrowing the gains tax-free, and ultimately, the life insurance policy is distributing tax-free. So now I'll go to another animation just behind it, the same life insurance policy. So I just placed the same life insurance illustration file on the client manager. And how did I get this? This is the nest egg. The green circles represent money that is not life insurance. I got this by filling out a fact finder. I think it took 40 seconds. Let's say it was a minute. So in a minute and 5 seconds, I press play, and here I am. And what I've done is I've shown how there are taxes due when you take distributions. So their goal every year here is $70,000. So let's press play. They get their respective rates and growth. You can change that however you see fit. We take a distribution, $100,000. Taxes are low in this case, 30%. So we net $70,000, and that's the goal we wanted, so it's okay. Next year, now we're age 71, and I have this alternating every year, every other year. So now they take the same $100,000 out. Taxes are now 40%, not 30%, so we only net 60. And that cues the life insurance to make a payment of $10,000, which of course in the last animation we understand all those workings, how it's tax-free, the distributions, and it fills it in to keep us at that goal of $70,000. And so here, of course, you can bring up the stats card. I'm playing this a little fast. It has all the real-time stats with the animations, and I'm just going to take that down for a moment, slow this down. But I have this alternating every other year. We can zoom out here, but we can see how a life insurance policy rides alongside with something that is vulnerable to tax increases or decreases in the future, and how the life insurance can help maintain that. So I did this entire video in one take. It's not because I'm some great speaker, but it's because the animations lend themselves to storytelling and articulate speech. Maybe that would work for you, or maybe for the advisors that you oversee. If you have any questions, reach out on LinkedIn. Until the next video, good luck at your next meeting.